Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with some major and some weird economic crisis effects today. First, in the US, another 5 million people applied for unemployment insurance last week. That brings the 4-week total to over 22 million. And given they had a labour force at 163 million at the start of March, that translates into an unemployment rate of 18% now. And you probably have to add to it many millions who don't qualify for unemployment benefits. On top of those, of course, there are millions who have taken pay cuts and reduced hours. The resulting consumer demand shock will be terrible. After all that, we're overlooking their low participation rate, which means they started with at least 19 million adults who'd previously given up in their labour force. Taking it all into account, that is a real job loss rate of 26%. All up, it's ugly. Oh, there's more. Workers in their gig economy are uncovered by any of these stats and are also out in the cold. Official help for American SMEs under an emergency $350 billion program has stopped because it has committed all the money allocated. In China, a new report shows the number of job ads recorded a steep drop in the first quarter of 2020, but the figure for the March period wasn't quite as dire as the first 2 months, indicating a minor recovery across the economy may be underway as the impact of their pandemic eases. Japan is dispersing $1,500 to everyone to assist with the economic effects of their economic slowdown, the latest country to deploy helicopter money. In Germany, factories there are starting to resume production as their virus control measures seem to be successful. There is also a partial reopening of shops and schools as well. In Australia, their March jobless numbers rose marginally in advance of the pandemic slowdown. And in a shameful move, the Crown Casino Group have paid a huge $215 million dividend to shareholders and left the taxpayers to foot the bill for the 11,500 staff that they've laid off. That dividend is equivalent to $20,000 per laid-off employee. Meanwhile, in equity markets, the S&P 500 has little change today, and similar results were posted in Europe and Asia earlier. In money markets, the US Treasury 10-year yield has fallen again, this time another 3 basis points down to just on 0.6%. Gold has moved back down again, down another $12 to $1,709 an ounce. And US oil prices are softer again too, now under $20 a barrel. The Brent benchmark has dropped as well to under $27.50 a barrel. And the Kiwi dollar will open almost 0.5 cent lower today at 59.5 US cents. On the cross rates were lower too at 94.5 Australian cents, while against the euro was softer at 54.8 euro cents. That means our trade-weighted index will start today at 65.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.